watching famous Dave on YouTube.
Hi folks, I just wanted to come on briefly and discuss a position that I have going on in GME. This is non-VIX related content, so if you're following me to watch the VIX, then this isn't not going to be the video for you. However, if you are interested in some stuff to do with GME, you can continue watching this if you want. And it looks like my camera's not working. Anyway, so let's go to the screen here. So what it came down to is I ended up putting a position on in GME yesterday, and I just wanted to discuss it really briefly with you today. And what I ended up doing is, you can see my position on the bottom here, but just to kind of walk you through it, what I ended up doing was GME yesterday. Let's go to yesterday's chart really quickly. And I noticed that finally TD Ameritrade is allowing us to trade more than just opening and closing strikes in GME. So here's the session yesterday. So right around here in the session, stock was about 53. I bought a put spread out in March, and the reason I picked March, and it was the March 21. The reason I picked that is that gives us a couple weeks, and my hypothesis is that this stock kind of peters out over the next couple weeks. You know, the excitement over GME is over. It's old news. People have moved on, and people slowly in mass start to say, gee, why am I long this thing? You know, it's not going to do anything, and it slowly starts to peter out. And in fact, we can see the stock over the last few sessions is slowly moving lower. Now, if you actually just look at the size of this chart, you can see this is actually some pretty big moves here. Look, this is between 51 and 100, or sorry, 51 and 94 in one day. So still very volatile, but starting to show signs of petering out. So what I did was I went ahead and I went out to March, and I purchased the March 40-30 put vertical. So this is a bet that the stock's going to go down. I paid, I believe, an average of $4.85 for this put, $10 put vertical. It can be worth $10 if GME is trading 30 or below in 37 days on expiration. Then I proceeded to ride the stock down a few points. So it was up around 51, 52 when I put this on. Stock went down to 46, and then it started to rally back. And once it got up to somewhere around 49, 48, I started to sell against this put spread I bought. I started to sell the lower put spread, the 30-20 put spread, which ultimately resulted in me having a butterfly on. So what's a butterfly? A butterfly is I'm short 2 of this 30 strike, and I'm long 1 of the 20 strike and 1 of the 40 strike. And this butterfly performs the best if on expiration we're exactly at 30. But as we have it right now, looking at it from where we are right now with stock around 50, we kind of have a target bullseye of 30. So over the next month, we're looking for the stock to go down towards 30, as close to 30 as possible. That's kind of the plan with a butterfly. In addition to that, and this butterfly, just based on where it is in relation to stock right now, it was a Vega negative trade. So if we see volatility is very high right now. Right here it says 280 vol, and we know it's been coming in. Volatility has been going down. So if you can have a Vega negative trade on, then that's going to work in your favor. In addition to that, this trade allowed me to collect a little bit of decay each day. So after putting this trade on, my delta was short 30 something deltas. That meaning every dollar this goes down, I make $30. Every dollar this goes up, I lose $30. And then I was collecting something like $20 a day. So in addition to this trade, I also bought some some calendar spreads. I bought the 12 March, 19 February, 30 put spread. And this is another bet that stock is going to move and get to around 30 in the next little while. And this trade as well is a trade where you collect money every day as the put that you sold is decaying a lot faster than the put that you bought. And so the this position will do well if we either kind of stay in this general area or move lower. It won't do well if we like skyrocket back to 200 or something. It will do poorly. And that is kind of the position I have on right now. You can see how many of each I have right now. Of the butterfly, I'm long 19 flies. You usually name a butterfly by what the outsides are. So you can see it says 19, 30, plus 19, minus 38, plus 19. So we call the outsides, this 20 put and 40 put, the wings of the butterfly. And you name a butterfly by the wings. So since I'm long the 20 and the 40 put, we'd say I'm long this butterfly. Which I was able to put on for decent prices. Overnight, we can see that we did kind of rip upward on the close yesterday, and it got up to 56, and then we kind of got down to around 48 pre-market around 5, 6 in the morning, and then we kind of rallied back, and as it appears we're poised to open about where we closed yesterday. So we'll see how this works from here. Once again, my thesis in this trade is that we are going to continue to grind lower, and I will act accordingly. If we do get a big rip to the upside, then I might buy in some of my 30-20 put spreads to get shorter. So if we start to rip up higher and higher, then I might adjust the position to get me a little bit shorter. If we do continue to move lower, then I might slowly take off the position for a profit. And that's kind of my plan right now with this GME position. Once again, this is non-VIX related content. If just to look at the VIX really quickly, we're showing down 83 cents. There's really is still a very wide spread between the VIX spot and the front week futures. And remember, we have just a week till expiration, so one of two things is going to happen. Either we're going to have some sort of volatility event where the VIX pops, or we're going to see the VXX and UVXY and whatnot move a bunch lower between now and expiration next week. All right, so there's that's what's going on right now with my positions. I hope your world is doing well, and I will talk to you very soon. Thanks for watching. See you next time.
You're watching Famous